Personal lines policies typically bundle a host of coverages within a single policy. On the other hand, commercial insurance provides more of a buffet style with a selection of coverages. The named insured has numerous choices that allow specific tailoring of a policy to meet the client's needs. Some businesses only need basic insurance coverage, with maybe one or two additions to their package, but many others require a more complex policy package. While there are monoline commercial contracts, they're much less common than a commercial policy package. For example, jewelry stores have a lot of risks: liability concerns, injuries on the premises, inventory losses, loss or damage to customers' jewelry in the jeweler's possession, as well as many more exposures. Selling the jeweler a commercial general liability policy would probably be insufficient in the event of theft or robbery. We also introduce you to other aspects of the commercial package policy like inland marine coverage, floaters that follow property not on the insured premises, and how common declarations pages and conditions work in commercial policies. Next, we'll detail commercial general liability or CGL policies. These provide coverage package for liability exposures, but do not cover the insured's personal or business property. We'll also explain property coverage in this lesson. What is a CGL policy? It provides coverage for liability-related claims that are encountered when negligence rears its head and the insured is legally responsible for injuries and damage to another's property. A CGL contract also provides coverage for other liability concerns, such as personal and advertising injury. We'll also include terms and definitions that are important and how policy limits affect the actual payment of claims. Something that may be new is the idea of occurrence-based commercial policies, which act very similarly to personal lines insurance, and what are known as claims-made policies, which is a completely different story in terms of how claims are covered. We'll also discuss retroactive dates and extended reporting periods, which are only associated with commercial coverage. Then we'll go on to explore what are known as insured contracts and how CGLs may or may not cover contractual duties of the named insured. It's important to understand how to apply certain mathematical formulas, as your clients will expect you to insure them properly. We'll look at how per occurrence and aggregate insurance limits are employed and give you examples of each in the event of a covered loss. Finally, we're going to go in depth with products completed operations coverage, and we'll complete this section with a look at how pollution may be covered by a commercial insurance policy.